don't know where we'll go in the next week or two, but I think we'll end Q1 higher than we are today. And as you know, I think we'll end 2025 north of $200,000. I still feel consistent about that. These crypto-specific tailwinds are just too strong to deny from my perspective for long. Yeah, it's an absolute game changer. We've been running this survey for 7 years, and for the past 6 years, we've asked advisors, what's preventing them from allocating to crypto? And you might think, it's how do I value this asset? Or it's too volatile for my portfolio, or I just don't understand it. But for 6 consistent years, the number one barrier they cited was regulatory risk and regulatory uncertainty. Well, the election tore down this wall. And I think as a result, we're going to see a flood of financial advisors, a flood of family offices, and eventually a flood of institutions moving into this space. It was a complete game changer for the industry, and I don't think we're going to go back. Yeah, as I look back on 30 years of ETF history, what I see is that the first year of an ETF flow is very rarely the biggest year. Typically, the first year is just a down payment. The second year is bigger. The third year is bigger. The fourth year is bigger. And there's some fundamental reasons for that. If you look at the Bitcoin ETFs, they're not yet approved on Merrill Lynch or Wells Fargo or UBS. I believe that over half the market still can't access these ETFs. So I think the $35, $36 billion we saw in 2024 will be easily surpassed in 2025 when we'll see $50 billion plus come into these products. I also think you'll see people who invested in the Bitcoin ETFs start to look at the Ethereum ETFs, and people who have allocated to the Ethereum ETFs look at the kind of new products that you mentioned, Bitwise and others are working on that look at smaller cap assets. So a rising tide lifts all boats. That's at least the message from ETF history. And I don't see any real reason why this would be different. All of the patterns look like it will be the same, and 2025 will be a record year for this.
Welcome to the Crypto Teacher. And I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you're joining the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. And also, guys, make sure you go like and follow the TikTok. More videos to come. And we have Bitwise says, by the end of 2025, Bitcoin will be at 200,000. And guys, we know we take out the guesswork. Only thing we have to do is follow the Fed and follow the liquidity. It is undefeated. And remember, the Crypto Teacher told you. And Trump is going to bring in that crypto regulation. And we know stable coins are the foundation of this new digital economy, because stable coins are only digital dollars. But now, due to this technology, with smart contracts, they're programmable. Being able to tell you what, when, and how to buy, and you have 3 to 6 months to spend them, or poof, they're gone. And we know Chainlink gives Swift to all CNI, so they'll be able to know you better than you know yourself. And remember, the Crypto Teacher told you. And then also, Bitwise talks about altcoin ETFs coming. And never forget what BlackRock's Larry Fink stated. The ETFs are the gateway to tokenizing this whole economy. And remember, the Crypto Teacher told you. And we have Trump tariffs are definitely coming, because he has 4 years to replace this federal income tax with these tariffs. Remember, guys, the machines are going to take over the economy. If less people are working, that means less taxes are paid, so the money has to come from somewhere. But then also, we know the machines are going to increase productivity. They don't take off. They don't need a break. They don't need health insurance. And they're definitely not going to talk back. And remember, the Crypto Teacher told you. And we have the big bank earnings kickoff tomorrow. And in this environment, banks definitely benefit, but it doesn't really matter what environment. We know the big banks benefit regardless. But this stock market is not about earnings. It's about valuation. It's about looking in the future. And the banks definitely have some headwinds. And Basel III is one of them. And we have Gerard Cassidy not telling us the truth about Basel III. Remember, Basel III is a global agenda. And the global agenda is all about this new digital economy. And these big banks have to increase capital due to the real-time settlement. They need plenty of liquidity, and there's no way these small and medium-sized banks will be able to make it. But remember, this is a plan. It moves in phases. They have 3 years to comply, and of course that matches right up to the fourth industrial revolution. And we have government spending just keeps rising. But guess what? Trump is on the throne. George is going to cut this spending because the United States dollar is going to a level playing field. It's going to eventually lose that world reserve title, and we're going to have the fall of America to Babylon and the rise of the BRICS nations led by China with that digital yuan backed by that digital SDR. Only thing you have to do is look at the Belt and Road and remember the crypto teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
Everyone's come to this same realization, and that does worry me. I think that the U.S. dollar will probably have more upside, and global stocks will probably have more downside as President Trump gets serious about implementing tariffs, and he has to. He has to, because in order to use them as a tool of negotiations, everybody has to believe they're not a tool of negotiations, that they're here to stay. And so he has a really huge interest in being pretty severe early on in his term. So that's the first issue. The second issue is that I think we're spending too much time on tariffs, not enough on fiscal policy. And I think that actually a big surprise for investors over the next 3 to 6 months is going to be that President Trump is not going to be allowed to spend as much as he planned. So deficits are not going to widen as much because the bond market will continue to put pressure. And so I think at some point in the first, maybe later first quarter, second quarter, there'll be a bond buying opportunity and a dollar selling opportunity. We're not there yet, but I think that's going to be like a second quarter.
Trump just announced an external revenue service to literally collect tariffs. If anyone was hoping this would be more talk than action, that announcement wouldn't seem to go in that camp.
Well, I've been pretty consistent about that, Kelly. I think that the president-elect meant what he said when he talked about tariffs, and I think there was a lot of, rose-colored glasses thinking on Wall Street and among his supporters, oh, he didn't mean it. Well, guess what? I think he does mean it. I think there's going to be tariffs and probably across-the-board tariffs. I think what Michael's talking about is one aspect of why the bond market is unchanged or yields are unchanged. But I think there's maybe two other aspects, and they're a little bit contradictory. I'll go through them as quickly as I can. The first is that the number was good today, but there was stuff in this number that can make you a little nervous about the CPI tomorrow. For example, what's happening with airline fares was one aspect that won't carry over. And then subsequently make you nervous about the PCE number, that it won't be as good. Either the CPI or the PCE won't be as good as we got in the PPI today. Maybe tomorrow we'll dodge another bullet, and we'll see. The second reason that's interesting to me about the lack of movement in the bond market today is something we've talked about, Kelly, which is that it's not necessarily inflation that's bothering the bond market. We've talked a lot about how the TIPS yield spread, which tells us what the bond market's inflation expectation is, it's up, but not nearly as much as the 10-year is up. And so this tells me that maybe the bond market is less worried about inflation, more worried about bigger deficits, and also potentially positioning itself for higher growth in the Trump administration.
Big banks kicking off earnings season tomorrow on tap. Goldman Sachs, JP Morgan, Citi, and Wells Fargo, their stocks all rising today. So the steep yield curve, that's going to be a big boon for the banks.
I think so, Melissa, because when you take a look back in time, first, we haven't seen a positively sloped curve since 2022. And then if you go back in time, whether it was back in 2001, or in 08-09 or 2018-19, as the yield curve steepened, net interest margins expanded. And I think that's the story that is going to be the surprise to the upside in 2025, assuming the yield curve remains positively sloped. So if the bottom or the front end of the curve stays anchored between 4 and 4.25, long end of the curve is around 475, maybe to 490, that is a nice slope to the curve. And the banks don't even need to aggressively lend in that environment. It's as the earning assets roll over. Think about the yields that Bank of America and other banks have in their bond portfolio from purchases made in 2020 and 2021 when the 10-year was below 1%. Those are going to roll over into higher yielding securities, which is going to help the net interest margins, not only for Bank of America, for all the banks. So we think this is the underlying surprise potential for 2025.
With Basel III, is that a tremendous tailwind? Is that equivalent to the steepening of the yield curve? How do you feel? What type of business is that going to bring in? And where should we look at the banks through that prism of regulation being lowered?
I think you put your thumb right on it. It's tremendous, particularly the Basel III endgame. Last Monday, Vice Chairman Barr for the Federal Reserve Vice Chair of Safety and Soundness, announced his resignation. Now this incoming Trump administration is going to appoint a new controller of the currency, a new head of the FDIC, a new head of the Consumer Financial Protection Bureau, and then they'll appoint another board member, maybe Michelle Baumann, to replace Vice Chair Barr. And in a speech last Thursday, the Vice Chair of the FDIC pointed out that Basel III Endgame should be capital neutral. And if that proves to be the case, think back to July of 23 when it first came out. They were talking about capital levels having to increase 16%. JP Morgan, Goldman were talking 20 to 30%. Now it's likely to be zero. We are going to have an industry that is really heavily capitalized, which will enable them to be more aggressive in the share repurchase programs. So we're going to go, I think, from a confrontational regulatory environment that we've had for the last 3 to 4 years to one that is more soft to touch and more supportive of our banking industry, so that the banking industry can get more involved lending into the economy to help stimulate growth in this administration.
It is more than ever the government spending $1.8 trillion so far in fiscal year 2025. That's about 6% more than the first quarter of last year, and setting an all-time record in spending for the first 3 months of the fiscal year. Treasury's taken in just about $1.1 trillion in the same time frame. So the government has also set a record for the size of the deficit at this point in the fiscal year, running at $681 billion. That's 26% higher than the first quarter of fiscal 2024. Now, as for what's causing this record spending, a big chunk of it is interest on the public debt. The U.S. spending $308 billion in interest the first 3 months of this year. That's a 7% increase from the same quarter a year ago.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box, provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is it's digitizing gold.
I actually believe this technology is going to be very important.
look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting at more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a treasury auction, that's a rare occurrence.
Cryptoteacher and the New World Order book, plus the 3 kids books. It's time to re-educate. Also, if new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get home stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York. COVID Stories 3. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.